All right, guys, we're going to get started here. Just want to take you through some tips about trading supply and demand. So I'm going to give you some 8 things that you could look for when you're trading supply and demand. So first thing I want to talk about real quick is here's a trade that I took, and this is how I set the trade up. You see, I had it already set up before price even got back to the level. So this was a drop-based rally setup, and price moved away from the zone very rapidly. Okay, so we can see that price took off away from this zone, and then price came back to the zone. I already had my buy limit order set in, so I had my limit order, I had my stop loss, and I had my target. So my target was a previous structure point low, which was this bear fractal. So that was my target. You could see where price has now come down to my zone. It's triggered me into the trade. All right, so I'm triggered into the trade. Price comes in deeper into the zone, a little bit deeper, puts me in a small drawdown. Not too bad, but I already had everything set, so I really wasn't going to mess with anything. That was the way we were going to look the trade, looking for a profit and so forth. So we just let that go. Then you can see how price moved away from that zone. We had a nice rejection out of the zone. That was a good sign. You can see I'm in current profit here. And then finally, we did hit our target. Our target was at this level right here, and that gave us 11.5 points with 5 contracts for a $2,875 trade at that point. All right, so that wasn't a bad trade for us. That was a pretty good trade. Not always trading with the same size contracts. Here again, another trade that I documented where we have a rally base drop, which is a continuation setup where we place a supply zone at the base. Okay, the base is a supply zone. So here we go with this base. You could see we have this base right here, and then we got a drop. Nice rapid move away from the level. All right. Then price moves up into the zone and triggers us. Now the thing about this, let's go back one slide, and you can see previously I already had this set up. So basically I don't even have to worry about anything. I don't have to, this takes all the psychological part of trading out of it because I'm already set and everything, and I don't have to do anything else but put this trade in, walk away. All right. But now if I come back here and micromanage that, then I just everything that I talk about disappears, and now I put the psychological game back into the trading right there. But anyway, price comes back to my zone. All right. And as price approaches the zone, we get a nice little drop slightly, but then price all of a sudden shoots back up and boom, takes me out of the trade. All right. So not all of these trades are going to be 100% successful. All right. So like I said, the market dropped a little after I was in this trade, but like I did, it shot right up and took me out of the trade. So this is what's going to happen to you sometime when trading anything. You could be trading supply and demand or whatever it is. So today I want to talk to you about ways that you can trade supply and demand, along with the main things that you need to look for to give your trade a higher probability of success. But guys, before I do that, I want you to know that I'll be doing a lot of live streaming coming up here shortly. So I'll be talking about trading with smart money concepts, price action concepts, support and resistance concepts, market structure, trading psychology, and most of all, risk management. So if you want an opportunity to be part of these live streams that I'm going to be doing, along with any new vids that I'm going to be posting, please, I ask you to please do subscribe to the channel. Click those notification buttons and you'll know when I'm going live or post any new vids. And then finally, if you like the content that I'm giving you today, please do give me a thumbs up because that helps out my channel and it helps me out. And again, I appreciate that. Now let's get into the video. But as always, I like to give you something of encouragement. So before we get into the video, let's get started with a little bit of encouragement. And that's coming from Hebrews 3, chapter 3, verses 12 through 14, which says, "See to it, brothers and sisters, that none of you has a sinful, unbelieving heart that turns away from the living God, but encourage one another daily, as long as it's called today, so that none of you may be hardened by sin's deceitfulness. We have come to share in Christ, if indeed we hold our original conviction firmly to the very end." Our hearts turn away from the living God when we stubbornly refuse to believe in him, to believe his word. If we persist in our unbelief, God will sooner or later just leave us alone and let us soak in our sin and rebellion. But God can give us a new heart, new desires, and new spirit. So to prevent yourself from having an unbelieving heart, we should stay in fellowship with other believers, talk daily with them about your mutual faith, and be aware of the deceitfulness of sin, which attracts, but it also destroys. And encourage one another with love and concern. So God bless you, my brothers and sisters. Now let's get into this content. Let's move this over here. All right, guys. So first of all, what is supply and demand? What's a supply and demand zone? A supply and demand zone is an area where there's a great imbalance between buying and selling. A supply zone is a zone where supply, basically selling, outweighs demand, which is buying. The stronger the zone, the more rapidly price will move away from that zone. So demand is just the opposite. It's an area where the buying outweighs the selling. There are more buy orders at the level, which causes the price to move higher or farther away from that zone. If the demand is great, price will move away very rapidly. If there's not much of it, then it won't move away that rapidly. You'll see price stutter around. So zones are classified on their structure. So if a supply or demand zone forms during a trending move, then it's either a drop-based drop or a rally-based rally. And a zone that's created at a trend reversal is either a rally-based drop or a drop-based rally. In this case, what we have here is a rally-based rally. All right, this zone's formed during a bullish move, and since it's a demand zone, we're looking to buy when price returns back to this zone. So basically, the demand zones are represented by the rally-based and drop-based movements, and the supply zones are represented by the drop-based and rally-based movements, and we'll be talking about those as we go further. And you can see price came back to that zone and absorbed the remaining demand at that level. So also when looking at your base, first the one thing you want to do is identify your base. So you identify your base based off of the things we talked about: drop, base, rally, rally-based drop, and so forth. And then also when looking at the base, you want to notice the low volume within the base. All right. So notice the low volume inside of that base, and then the increasing volume to exit the base. That's going to be something you want to be very aware of, especially that base. All right. So this is a drop-based drop zone, and it's formed during the bearish move. And since it's a supply zone, we're looking at to sell this zone when price returns back to this zone. So again, you can see our zone here. When price returns back to the zone, we look to sell this because it's a drop, base, drop. All right, so a drop, then we have our base, and then we drop. And we're looking to sell when price comes back to this level. And this here is a rally, base, drop supply zone, and it represents a reversal if price breaks structure. But if it doesn't break structure, it represents a ranging market. So the structure would be here. And as you see, we have the rally, base, drop. Price didn't break this structure here, and therefore we probably assume that price may be in a ranging area at this point. And then we have a drop, base, rally. And this is a demand zone. It represents a reversal or ranging if we cannot violate this structure. So we have the drop, base, rally. And then again, we want to see price violate structure. This would be the structure level here. Price didn't violate that level. So it leads us to believe that we don't have a trend. We probably more so ranging somewhere in here instead of seeing the market trend. But again, we get that push off of the base. And we're going to talk about when price comes back to that base, the things that we're going to be looking for. So it's a good base, but as we see price push higher, it doesn't violate structure. So therefore, we may be in a range quite possibly if price comes back to this level without violating structure. All right, so just some things to be aware of. You want to always be aware of these things when trading with this supply and demand. So a week later, price comes back and hits this level, absorbs up all the demand, pushes up higher. All right. So the second thing you want to look for or be aware of when you're looking at your zones is how much time did the price spend at the zone. So time at the level is going to be a very important thing. So the less time price spends at the zone, the more out of balance supply and demand is at that level. All right. So that shows us smart money is aggressively entering the market at that point. They're coming into the market very quickly. Boom, these orders are going. So at price levels with supply and demand more out of balance, the price will spend the least amount of time at that level and also move away from that level rapidly. So this is a strong supply zone because it really spent one candle inside that zone. You could say two if you wanted to, but really one. And then we had our level and then the market dropped out of that zone. Next thing is this is a strong supply zone. So let's back it up real quick. This is the strongest supply zone we could have because this is one candle. And then the next zone is a strong zone because it's 2 to 3 candles. So it's a strong zone. All right. But the previous one was stronger because you have that bigger imbalance because the market didn't spend as much time inside of that zone. And then finally, we got the weakest zone because it spent the most time in this zone, in this base right here. This base had the most candles. Now, just because it's a weak zone based off of what we're talking about doesn't mean it's going to be weak overall when price returns to that level. These are just some of the signs and things that you need to be aware of that can help increase your probability of a good trade when trading with supply and demand. So this was a weak zone here. And even though it was seen as a weak supply zone, look how well it worked out. So other factors are how price left the zone. As you can see, it left the zone big. But again, this is news more than likely, this candle here. But even on news, we still had a nice zone here. And then we could see how the market left that zone. And then how price came back to the zone and still honored that zone. So the large candle definitely was news. But even though, you could see that we made that still a supply zone and price came right back to that level and honored that level. And then the market dropped after absorbing more of this supply. And then here we want to look at the third thing to be aware of and notice is strength of supply and demand zone. How did the price leave the level? How did we take off from that level? Did we take off strong or were we rapid? So the more rapid the price moves away from the zone, the more out of balance supply and demand are at that zone. Basically like the same things we said, the way we move out of it, that shows the imbalance. How long we spend time at that zone, that shows the imbalance. So in this zone, there's an imbalance between supply and demand where the supply is outweighing demand because the price drops out of this zone very rapidly. All right, so also notice the low volume base. Here's our base, low volume, some of the lowest volume. That's a good sign if you want to see that in your base. And then notice the increasing volume coming out of the base. You need increasing volume to leave that level. And that's increasing supply coming into the market. And then the market drops to the downside. And that's what you want to see. All right. Now, we want to see what happens when price gets back to that level. Since we have strong indications that this is a strong zone based off of the things that we talked about, then more than likely when price approaches back at this zone, it's going to be honored because there's still a lot of supply to be absorbed by the market as it moves up into that level. And then boom, we'll see it. We could see it drop to the downside. All right, so once again, we have a low volume base. This is something very important, guys, this low volume base. All right. Volume is given indications at all times. And then finally, as price breaks the base, we see the increased volume. All right, so we see that increased volume right here. And the strength of the move with these two big candles. So the rapid move away from this base was very strong. You could see that there's two strong candles based off of the volume. Then we start to see declining volume. But the way we left this area, that represents a big imbalance of demand at this point. All right. We delete that. So we have a demand zone that's weak, first of all, because of the time spent at the zone, but also look at how price leaves this zone. First, you see the low volume zone, so that's a good thing. But there's not really a big imbalance because price didn't really leave this zone with any kind of force. It wasn't rapid, it wasn't swift. It was more indecisive and very weak until we had a nice move here. But this indicates to me that this might not be a very good zone. All right, so I wouldn't make this a supply and demand zone. So that's one thing you would look at when you're making your zone. How did we leave that zone? If you're leaving like this, then why would you even make this a zone? It's not a supply and demand zone. It's nothing that you would mark. So then when price returns back to that same level, you can see where price came back to the level. It didn't honor the level. And why didn't it honor the level? Because there was no imbalance here. All right, this was no strong demand area here. So that's why it left this area very cautiously until here. And then it took off at that point. So when we came back to the level, it never was honored. Didn't even matter. All right, guys, so the fourth thing that you want to see take place when trading is for these fair value gaps are imbalances between your candles. So you're going to notice these with 3 candles. It's going to be a 3-candle observation where you have your first candle, your second candle, and your third candle. And between those candles, you're going to look at the first candle wick high on an up move and the third candle wick low, which creates this imbalance here, which is also known as ICT fair value gap. All right, but this is where this imbalance is, and this imbalance is just basically like we see the same thing that we have here, an imbalance. That's when the market starts to push off of this level. And this imbalance is during the move, you have more buying than selling, keeping this market moving to the upside. Creates this big imbalance between the candles, as you can see, which gives us this fair value gap. And those are signs that you want to see leaving this level. That indicates to me that now I know that we have all these things lined up for a strong base, that when we return to this base, we're probably going to have a high probability of a good trade at that point. All right, so those are the things that some of the things you want to be aware of are these imbalances. Again, you can see another imbalance as we had a major big candle. Look how we left this zone. Again, we didn't spend much time in the zone. We had 4 candles in there or so, and very small candles, but then look how we left the zone. All right, left with force, left with a big rapid candle. And then we had a little drop off here, but we still had this imbalance. All right, so this imbalance shows me that still we have strength to the downside. And then when we approach this zone again, we would be looking to sell at that point. All right, so these are signs again that are going to keep you to know if you have a good zone or not, to get into it, to create a supply or demand zone. Basically, this is what you want to really check to know if you are creating a zone. So then with that same zone we had, you could see where price created this imbalance, but then we had a little gap down here. All right, so here's a gap here. Here's an imbalance, and then we got a gap right here. That gap is even strong. That's a strong imbalance here. So again, nice zone. Spent 1 candle inside the zone. That proves that we have a big imbalance of supply at that point. And then you can see how we took off from the zone. Even the next candle was good. And then we even gapped down even more. That's a big sign here. But then price failed here, it looked like. And then we approached this zone. We would consider this a strong supply zone, and we look to short that zone. All right. Again, another supply zone. We have our imbalance between your 1, 2, and third candle. You could see the imbalance between these wicks here shows you that you have this gap here, which is again this fair value gap or imbalance basically. And that proves to me that we pushed off the level pretty strong. The bigger this gap is, the bigger the move more than likely. And then you can see that when we come back to this level again, we'll be looking to short it. All right, so a very nice strong sign for a supply zone at that point. So the fifth thing that you want to look for, and that's going to be important for you to see when observing your zones, is how far did the price move away from the zone before returning back to the zone. All right, how far away did it move? What's the from the point zone, from the base to the lowest point? That's a big drop there. The farther price moves away from this zone before returning to the zone, the greater the probability. All right, the probability of a good trade at this zone when you reach back to this zone. And we're going to talk about some things. We just touched this zone and then dropped hard to the downside, pretty much back to where we had support at this level. All right, so it dropped all the way back down to that level. That's a big trade. So when the price comes back to the supply zone for your short entry, we have a good idea where the buyers are and a good idea where the sellers are. And basically we know that there's no buyers above here. All right, and we also know where the buyers are because look what happened down here. Took off up here. We also see this was a nice level here, flattened out a little bit, so we could see a little bit of that imbalance that we had here was destroyed. We had more of a balanced market here. That's why we start to flatten out. Then we got that little bit more of an imbalance, found support down here, pushed higher, got into our zone, and dropped all the way back down to the support level. All right. Also, you had a nice little support level under this base, as you could see here. And that's where that first target would have been looking at. And then price was able to break through there and push down to this lower level here also. And then now here you see a zone created with a nice move away from the base. All right, the distance traveled was nice, and it was a nice move away from that base. So you got the nice base, strong signs of a good base because first of all, guys, time spent, distance we spent, created support here, then pushed it up to this level. Market came back down and violated that support level, came down and created new support down here. All right, so you could see again, nice base and the way that we left. All right, so that's going to be the something that you want to be aware of. And then the next thing that you want to be aware of is going to be the break of structure. That's going to be important. So the sixth thing that we're looking at is the break of structure. All right. The break of structure determines the direction and gives us some assurance that if we break bear structure, when we're entering a supply zone, there's a high probability that price will drop and continue to the downside. All right. So if we break bear structure, these are bear fractals. These are fractals levels, and fractals create your structure. These are bull fractals. This is a bull fractal level up here. This would be a bull fractal level up here. All right, we violated bear fractals. So in this whole section here, we first were violating bull fractals and not the bear fractals. We weren't violating the bear fractals. But then we found the top up here, really got a little bit of shortening of the thrust here, got to the top, and then we violated bear structure. That also let us know that now, since we violated bear structure, that we have this supply zone here, and when price comes back to the level, if we don't violate bull structure, we're staying in the downside move. So we'll be in the bearish move because we already showed that we were starting to change structure just with this break right here. And then now we continue, and we would expect to break this structure if this was going to be the next structure point. So when we enter into our supply zone trade here, we would look to break that structure because we would look at this as a continuation to the downside. The only way it wouldn't be a continuation to the downside is if it couldn't break that structure, but that's where we would take our target, our profit. So also, we already broke this structure, so we're not going to be ranging, that's for sure. If we thought we were going to range, the market would have ranged here. So we would have came down, we wouldn't have broke structure, and then we would have been in this kind of a ranging area here because we kind of had maybe small shortening of the thrust here because it was two candles here, and it was 3 candles here. So shortening of the thrust is from this high, you have basically 3 candles, and from this high, you have basically 2 candles. We shorten the thrust a little bit, the thrust of the upside. Then the market comes down, violates the structure. If it didn't violate structure, then we would then again know that we were up here and we would be flat, and then we would look for a ranging market at that point. All right, but instead we broke structure, we pull back up to the level, and we expect to break structure again to continue with the bearish move. So that's going to be something you want to look for, is these breaks of structure. All right, so again, in this market here, let's look at the bear structure. So here's the bear structure, bear structure, bear structure, and then final bear structure. Here's basically the bull structure. And we don't have structure here yet, but as if this created this high point with a bull fractal up here, then we would see this, that is the structure. In order for the market to show us that it's going to reverse, because we're now we're in an up move. So we're looking to buy this demand market zone right here. So we had our zone, nice strong zone. The market pulls back to the zone, but doesn't break this bear structure. Throughout this whole trend to the upside, we don't break bear structure. We haven't broken bear structure once. All right, so therefore, looking for the move to the upside. Now watch for the shortening of the thrust on the upside, because then that represents that we may break this structure, because the distance from here to here is, look at the distance. Then the distance from here to here, a little bit shorter, and then from here to here, much shorter. So we may see a break of structure. We may not get a move that comes and breaks this structure to continue. We may see the market break to the downside and violate this level because of the shortening of the thrust, or else we'd be just sitting here ranging for a little while before either breaking to the upside or downside. So you'd have distribution at the top, and we would flatten out a little bit, and either we break to the downside or continue to the upside. Here again, we have all the things that we discussed, basically. Time spent, rapid move away, the distance we moved away, and imbalance between the candles, and then finally break of structure. So again, look at the structure that we're violating here. And this is the main structure here. We violated that, so we know this is a bullish market continuing to the upside. Here's the bear structure, basically. We haven't violated bear structure. And so what happened here, again, the move to the downside, shortening of the thrust developed right here, and you could see we flattened out here pretty much. So you had a bigger gap here, then you had a smaller gap here from here to here, but then from here to here you were even, you didn't break. So now the next thing, you would probably see a higher low develop. So therefore, when we get into this trade, the market comes down into this demand zone, we would expect it to move to the upside. All right, because in order to violate, we would break this structure here. All right, now you're going to have breaks of structure as we move down, because you're going to have, the markets are fractal. You're going to have trends within the trend. So we're going to have a corrective wave, and then the move back to the upside. And in that corrective wave, or that corrective move to the downside, we may have structure breaks, but then finally we break the true main structure to move back to the upside. All right, so understand that. All right, so the seventh thing you want to pay attention to when looking at these zones, and the thing to be aware of when price comes back to your zone, is the rejection. All right, this is now different. This is now talking about the rejection as we approach the zone. That means this is a strong zone. So did price reject or enter deep into the zone? So the rejections at the outer edge of the zone, they indicate that the zone has strength, right? So if price comes into the zone, it represents slightly weaker supply and demand. So I would say, like, if price comes up into this zone deeper, then I would think that we have weaker supply and demand. But just coming to this zone right here, touching this level and then dropping, coming back right up to it again, spiking it down and then dropping that hard again, you could tell how strong this supply zone is. And it signified a strong zone based off of everything that we see, because the time spent, you couldn't even tell really, but you had your smallest volume bar at that point. And then when we left the zone, we had our increase. So we knew we had an increase of supply coming into the market, and you could see each candle got bigger until we got down to this point. We started to fall off. Then at that point, the market started to move to the upside. Now, approaching my zone, as I approach my zone, things I want to look for when getting into the trade. So this right here would be this candle. So I'm going to be talking about one law by Wyckoff is effort and result. It's one of the main things I look at when coming into any level. The effort and result. How did we? The effort is your candle, is your volume bars that you see on the bottom. The result is what your candle spread is. So is it a big candle spread, and where does it close? So it is a big candle spread, which represents a big volume bar, but it closed near, not all the way in its midpoint, maybe in its top quarter, so 3/4 level. All right, so we don't want to see that with this type of a bar, because you want to see that thing closing as to the highest point as it can, representing that we still have strength to the upside, because this lets us know that now we're starting to see a little bit of supply coming into the market at this point, because this is all demand. We're starting to see a little bit of supply coming into the market a little bit to be able to push this down. And then finally, this is this candle here. But then when we get here, we have this take place with a rejection. We're putting our entry in at that point. But see, we should already be in the trade. This is where I enter the trade, because the farther away from the level that you enter the trade, like if you're waiting for price action to enter these trades, you're waiting for this, then now where's your risk? All right, are you going to say I'll put it up here? You could do that, but to me, my risk is here. That's as far as I can go. So I don't want to be that far away from here to here. All right, that's a lot of risk. Yes, I can shorten it by putting it at this candle, but the zone is the ultimate level of the resistance point, basically, where we can't stop where we wouldn't see the market failing us. All right, so that's why you want to enter here as close to this level as possible. All right, what it does, it eliminates risk for you. All right, so you already know what your risk is. You already know where your targets are, and you can get your targets from looking to your left. And even at these levels down here, you would look at this as a support zone. You would draw a zone on this wick, and you would look for the market to come down to that point. Now, in this case, the market comes back up, hits into our zone here. Now, let's look at the volume coming into the zone. Watch this as you come into the zone. This is the main things to look for when you're going to trade the zone. But again, you want to already have your target set, your order set here, stop loss a little bit above, then your profit target. But the thing that we see coming into the zone, see these three candles? Look at the volume drop off. That's a sign that coming into this zone, we have weakness as far as demand. Demand is weakening. Supply is starting to show itself, starting to become stronger. And then finally, boom, there it is. But you're late. You're way down here. Yes, you can put your stop loss way up here and then enter down here. But you already created more risk for yourself. You want to be as close to this level as possible. All right. That's why you take the trade at that level, or else you don't trust your trades. So don't trade supply and demand then, if you don't trust your zones, because you already know what you're going to lose. All right. And that's the object of trading this, not really waiting on the this price action. If you really wanted to wait on price action, you would hope that price would be up here, because here's the way that you should trade a zone. This is the way you should trade a zone. You should have an entry here. But if you don't have your entry there and price pushes higher into the zone, the higher price comes into the zone, then you can start to move your entry up and place an order and start to move it up. So say price moves up into the zone all the way up to the top, then you should put an entry in the middle, short with a stop loss slightly above, and look for your profit. All right. If price comes all the way up to the zone and a little bit out of the zone, then put your entry right there and your stop loss slightly above, you have eliminated tons of risk at this point. And then now you're pretty much trading risk free. And then once you get that 1-to-1 break even, I wouldn't even place a break even at that with that little small risk there. I wouldn't even place a break even until we pushed down deeper, and then I'd put an entry at the bottom. I'd put my stop loss at the bottom of the base, and this would be a free running trade at that point. All right, hopefully you understand that, but that's how I would trade them. That's how I trade the markets pretty much. All right, so here we see price come back to the deep into the zone, but still it offered a good opportunity. But look how the move is so rapid on the third touch. So here we see price comes deep into the zone, but it still gave you good profit, not bad profit. And you could, now again, this is what I was talking about previously. So suppose you didn't put an entry here because you wouldn't have caught this trade because it just dropped from here right down to here. So you wouldn't have caught this trade. And if you did put an entry here, you would have caught the trade and then probably got stopped out right here. All right, so see either way. But now here we have a big move to the upside here inside of our zone, and price came all the way up here in the zone. Why wouldn't I put my entry like as close to this point as possible with a stop loss above this level here? I eliminated so much risk, and now I can shoot for my targets, look for my areas where I want to take profit, and maybe my ultimate targets. All right, but again, remember, we need to break structure, and then if we don't, we could be ranging. All right, but again, talking about how you come into a zone, deep into the zone, as opposed to this right here. All right, so this third time we come back to the zone, you can see we just barely touched and dropped hard, but then finally we come way back into the zone. Price failed us, and we weren't able to, we basically already absorbed most of the supply, and then demand overcame supply, and then the market pushed higher. All right. So the last and final thing to look for is the momentum loss. Momentum loss is the key to a reversal when approaching any level, any key level, any support and resistance level or whatever. So the first main thing we want to notice is decreasing volume coming into the zone. And I already showed you that a little bit, and I'll talk about it a little bit more. Some of the other signs that you're going to see are candles are getting smaller. We have multiple colored candles and candles with wicks on them, all right? So here's our zone. We got a nice zone here. You could see the low volume zone, right? This is that low volume zone. And then you could see the increased volume as we leave the zone. Strong zone represents a pretty strong zone, all right? But then coming back into the zone, look at the drop off of your volume right here. This shows weakening, very weakening demand coming up into this level. And then you get a drop here. All right, shows weakening demand coming into that level. And then as we come back up into the level again, you could see we start to slightly increase a little bit. We had one increase here, but it was no follow through on this move. The market dropped to the downside. At that point, you're too late trading this, if you ask me. And then the market continued to drop to the downside. So you want to see that momentum decreasing coming into the zone. So that loss of momentum we want to see coming into the zone that we're going to trade back to the downside. We don't want to see strength coming into that zone because that lets us know there's still strong demand coming up into the zone. We want to see demand getting weak coming into the zone. That way we know that when we get ready to take that trade, it's probably going to be a higher probability of being a successful trade for us. All right, here we have a low volume base. So you can see our base. Low volume. All right. And as price approaches back to the supply zone, we can see decreasing volume. So as we come back into the zone, you can see this decreasing volume, and that started right here. And then finally, you got an increase of volume right here, and then the market dropped. Volume precedes price. If you won't look at it, you're going to miss it. You won't have an opportunity to get that trade if it drops that hard on you. Comes back up here, doesn't really touch, and then drops like a rocket. So you want to see that loss of momentum coming up into that area. That's a big sign for you getting into your trade. So some of the things we talked about were what you look for at your base, and then leaving the base, and then approaching the base. So we talked about all those things. what to look for at your base, how to define a base, what the movements of the base are. Then we talked about the things to look for when we leave the base. So we leaving the base, what are the things we look for? The rapid movement, the break of structure, and so forth. And then when we're coming back to the base, because coming back to the base is where we're going to look for taking our trade. So coming back into the base, we want to see decreasing volume, even coming to the downside. So I should have another slide, but coming into the downside, if this was going to be our demand zone, when price is coming down into this zone, we don't want to see increasing volume. We want to see decreasing volume, because that shows a weakness, and it shows weakening supply, and then possible we get our imbalance, and then we can see increasing demand come into the market. We don't want to see increasing big candles coming into the market like this when we're coming down to the downside. Now, I'll talk about these big candles on another day. They do represent something, because I always talk about institutional traders have to buy to sell and sell to buy. But let's move to our next slide here. So basically, we have a supply zone. It's been identified on the higher time frame. So in this case, we're going to be using the 5-minute time frame with our entry on the 2-minute. That's what this is going to be based off of. All right. So notice the increasing volume away from the zone. This is what I'm talking about. So look at the base right here, low volume, but then it increases coming out of the zone. Then we flatten out. We got another flat base right here. And then look at the increase in volume. This could very well be a base drop. So this could be another supply zone right here. And you can see how we have big candles. Each 3 candles are even bigger than the other. All right. So that's very important, coming away from the zone. All right. So the things that we notice, again, we broke structure. We set a little bit of time at the zone. We left with not very rapid. We had 2 decent candles, but then this. I would say this zone was stronger than this zone. But we'll see. The market drops to the downside. You can see the big increase of the supply coming into the market here. All right. So on the 2-minute time frame, price reaches back to the supply zone. We came right back into our zone. The increasing bull volume would indicate that price may break the zone. So we have that right here. That would indicate to me that price might break the zone, because look how much volume that is. And that lets me believe that this is going to be a break of this level. But again, this could also be, I don't know if this is the market open, but looking at that, you see all that, you say that's major demand coming into the market. And the market pushes higher. So in this case, it would be important to confirm the next candle. Now, if I'm trading the zone, I'm just already going to be in the trade already. I'm not going to be looking for the 2-minute time frame or anything like that. I'm going to be trading this at the zone, and I'm going to put my stop loss there. I'm going to take the trade or take the loss. All right, that's how I would trade it. So in reality, you want to have that. The best trade is where you would already place your trade at that bottom. But let's move on. So the next candle confirms the supply zone and the entry below the candle, but that's not the entry we want, right? But again, that's how you're going to get if you wait for confirmation, if you wait for candle confirmation, because you've already had the increase in demand already. All right. So the demand already increased, but you're going to put your entry at that point, at that level. You put your stop loss above this point. All right. Let's go back right here. You can see where we entered the market, and we pretty much got a 2-to-1 ratio. So we made stop loss, and then we doubled our target, doubled that. All right. Now, again, I would have been in the market up here, not down here. And I would have only been risking this much. I believe now, if you look at this, you risk even more. Even just with the candle, your risk is greater than this zone if you would have taken your entry right there. But in order to do that, you have to trust what you're doing. So it's hard to just start trading supply and demand and say, "Oh, I trust this level. I'm going to take a trade as soon as it touches this level." You have to test. You have to test this stuff out. You have to learn how to draw your zones. You have to understand the market structure, and then you'll start to see this stuff happening and taking place for you, and you'll start being more confident in your trades. So just test it out. But again, you created more risk by waiting on the confirmation instead of taking the smaller zone trade. The zone risk was less than the candle risk. All right. But you could see we made a 2-to-1 profit. All right, so price returned to the zone, reject that upper level again. So it came back again, reject that upper level. You wouldn't catch that move unless you trade the zone, like I've been telling you. You would not catch this move. So when price came all the way up here, you should have been already say, well, at least the worst, I should have an entry here. But you should have had it in the middle. And then you'd have been able to take profit down in this area because you have these equal lows down here. All right. And therefore, you'd have been able to take profit as the market comes back down to this level. You'd have been in the trade. But that's how you would trade these supply and demand zones. And that's how the things that you look for when trading supply and demand zones. So hopefully, guys, that this helped you out a little bit. Again, you have to test this stuff out in order to get confidence to trade this stuff. But I just gave you 8 things that are going to help you to get your supply and demand mentality and some of the things that you're going to look for to make sure that you have a strong zone to give you a higher probability of your trade succeeding. So again, hope that helps you guys. Please do subscribe to the channel. If you like what I just put out, please let me know you like it by giving me a thumbs up. And if you have anything you want to ask or say or anything you want to see from me, let me know. But until then, guys, have a great one. God bless. So long.